Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. We've been here since 2003, bringing you advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms like our 22 SPY and ES mean reversion systems and our proprietary KISS trend following systems. Okay, let's go ahead and get started here. Today was an FOMC day. A lot happened in the market. Market sold off very strongly after the FOMC and the Fed speak. So, going to give you an update on that. Again, this is a state of the market technical analysis review for September 20th, 2023. This is our back-end newsletter recorder for our standard web page format, and I'm going to go ahead and start this now. Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. This is the Wednesday, September 20th newsletter. Tonight's newsletter, as you can see, divided into 6 major sections. By the way, I did add some trade ideas tonight. I added a handful of short ideas. I also posted those on the trading community blog. Again, today was the FOMC, as you know, highly anticipated. And yesterday, as you know, the market was down quite a bit in the morning. It then bounced off that lower trend line of the coil that we've been discussing for the last 2 weeks. So it was a logical place to bounce. The S&P bounced about 55 points off that trend line. So it was a good area to take some profits on the shorts and then, reestablish them, quite honestly. So, today we had the FOMC, and this morning the market actually followed through on yesterday's rally. It was up 17 points, the S&P was in the morning, but by the time the FOMC came out at 2 p.m. Eastern, as you know, the Fed kept the rates the same, but really what the market didn't like was the more hawkish comments for next year. I think next year the market was pricing in, 3 or 4 rate cuts, etc., and the Fed took that down to maybe 1 quarter point lowering, and pushed it out until something like September 2024. That's quite a long time. Again, obviously things can change, but market didn't like that. Not surprised, quite honestly, with things here. But anyway, market sold off strongly after that FOMC. Now, guys, the onus is on the bulls to recover this right away. Okay. Sometimes you get the opposite reaction after the FOMC, so it is possible. But we did have a bearish engulfing candle today, so not a pretty candle. So really, again, the two options are still valid. One would be an ABC. Again, we're getting quite deep for the coil pattern, triangle pattern. That's still possible, but we're getting quite deep. But it's still possible. The other pattern that we favor is that ABC zigzag. They could result in a deeper pullback, maybe to the 4,200 area, which quite honestly, I would love to see that. It'd be a good buying opportunity for maybe an end-of-year rally. So we'll see, guys. Onus is on the bulls. Remember, we're now in the weakest seasonality time of the year. These next 10 days are, seasonality-wise, the weakest of the year. So we'll see what happens. And, other things. As far as our systems here, the mean reversion systems, we only have one subsystem that's in a trade, a long trade. That's the SPY. That's the trend pullback is in a first entry on both SPY ETF and one of the micro ES contracts. And as I've explained before, that trend pullback reversion to mean system can be a bit early. Sometimes it requires 2 or 3 entries. And so it remains to be seen if that ends up needing those entries or not. Okay. If we have that deeper ABC pullback, then likely those systems will need a couple more entries, and it's possible we should see some other subsystems trigger. Again, that's the nature of mean reversion. They buy when things don't look good. Sometimes they buy early, but overall, they have 80-90% winning trades. Okay. Tomorrow, Thursday, we have initial jobless claims, existing home sales. By the way, some of the shorts I added are in the housing sector. And then Friday, we have the S&P Global Manufacturing Services and PMI. Next. Item number 2 shows the index sector table, what transpired today and this week. So you can see Nice pullback today. The Dow was down the least. S&P down about a percentage point. NASDAQ down 1.5%. Russell down 1%. You can see the moves for the week with the Russell being the weakest. As far as the major market sectors, we follow 21 of them here. Obviously, most of the sectors were down today. Currency-wise, U.S. dollar had a nice rally after that FOMC. Market didn't like that, and the 10-year remains very strong. Cryptocurrencies were weak today. They're still up for the week, though. Commodities, mostly to the downside. The index is down 0.8%. Crude oil down 0.9%. That has the biggest effect on the DBC ETF, quite honestly. Natural gas up 2.5%, though the stocks, such as the ETFs, UNG and Boyle, were not. They were down. Copper was up. Some of the ags were up. So mainly the weakness was in the energy area. And as far as precious metals, we had a pretty good rally going in GDX in the morning, but a lot of that was given back after the FOMC. It still closed up 1%. Gold closed up 0.07%. So the stocks still are leading there for now, holding up quite well considering the strength in the dollar. And as far as the bonds, TLT up, 10-year, 30-year down. Next. Item number 3 shows the economic news calendar. Like I said, we had the FOMC today, and as I stated, we already have the initial jobless claims tomorrow, natural gas inventories, Philly Fed, and of course PMI on Friday. All right, guys, let's go and jump into these index charts. So first chart below, item number 4 is the daily chart of the Dow. So the Dow closing right near this uptrend line, which goes back to March. Remember, it bounced off of that in August, rallied up, formed a lower high, stalled conveniently at that 61.8 fib. Good area to short. So far, we have a 3-wave pullback, testing the uptrend line. Next, moving to the S&P 500, our proxy. So here's that daily zoomed-in view of the S&P 500. Just a beautiful example of technical analysis. In the summer, we were showing this channel. Price stalled at the top of this channel in July. It was a good area to exit. Remember, coming into late July, we became bearish in the market. We thought we said the market's likely to have a correction in August and September, and that's exactly what has transpired and has been following seasonality extremely well. Anyway, the first good sell-off, see price bounced around this 50% fib, rallied up, tagged the broken channel line, which became resistance. Breaking a trend line, it becomes resistance. Okay. Since then, we have had 3 waves, but today, well, first off, you can see the coil pattern we've been discussing. Yesterday, price tagged the coil perfectly, bounced off of it, and we had a little bounce even this morning. Price stalled right at that 20-day moving average. Okay. And then, of course, it didn't like the FOMC in the comments. Big sell-off, breaking the trend line of this coil. Now you're into a demand zone, but it's a zone, guys. I mean, it extends all the way down here to about 43.50. So we'll see. Again, that is a bearish engulfing candle, not a pretty candle. One option would be we put in a little bounce here, but then ultimately go lower. Again, the onus is on the bulls here, guys. Like I said, it's still possible that we have a more of a sideways correction here, but the other possibility, like I said, is the deeper ABC, where they've moved down into mid-August is wave A, that's wave B, and we go down into wave C, likely down almost near the 200-day moving average. That's one of the possible scenarios. The other scenario would be the more bearish one, where that would put in a wave 2 and we go down to wave 3. Again, for now, we favor one of the 4th wave options. Next, chart number 6, here's a zoomed out daily view of the S&P. Remember, I've been showing this coil. So we closed, again, slight breach of the coil. Again, on a really good sell-off, guys, like I said, if this ends up being a deeper ABC, there one target would be this area, this 43.20 area. That's been important resistance and support. And of course, the other target would be this lower channel line in the 4200s. Next. Chart number 7, here's the wave counts that we've been showing. So again, we favor this at least for now as some sort of fourth wave correction. Again, it is possible under the bearish scenario that we put in a bigger top, and that lower high was a wave 2, and we're going to go down in a wave 3. Okay, if it's a wave 3, remember that's a trending wave, then price should accelerate and really dump hard. Okay, so that's how you'll know if it's that scenario. But for now we're favoring more of one of these wave 4s. But again, even a deeper wave 4 can end up in the, like I said, mid to lower 4200s or around this channel, and that's still a pretty damn good pullback. Next, chart number 8, here's the weekly view of the S&P, down 1% for the week so far. So you can see this pattern I drew several weeks ago, where I was postulating this little bounce lower high as a wave B, the initial move down as a wave A, and we can get a move all the way down to the bottom of the channel in a C. Given today's action, I'm starting to favor this a little more, but we'll see. Again, if you're short, just have a stop in place. But this is one potential option, pulling all the way back to that channel. Next, chart number 9, here's the daily KISS trend system. Again, no changes here. Price closing right near this ATR. You have the smart trailing stop below. So again, if we have that deeper pullback, this is likely to hit its stop. All right, just giving you a warning. Again, these KISS trend following systems are unlike the mean reversion systems. Our mean reversion systems that we run and send signals for SPY and ES, they have roughly, most of those have around 90% winning trades. Trend following systems have much lower winning percentages, maybe 60%, 70% winning trades. And so a lot of times after a nice trending move like you see here on the S&P, it caught a nice long from March into early August. A lot of times your next signal is a whipsaw. You rarely get back-to-back big winning trades in these trend following systems. So it's, again, their odds do favor more of a whipsaw here, and we'll see. But stop hasn't been hit yet. Next, chart number 10, here's the 4 time frames we like to follow. So on the daily chart on the upper left, again, we stalled around that resistance cycle. That's the sign, the magenta dots there. We've pulled back from there. We're right on the ATR here, and price is really leaking oil in these smaller time frames. Look at this. Crashed right through the support cycles or below the ATR on all these time frames. Next, chart number 11, here's a half-day chart, 195-minute, and you can see the slight breach of this little coil. Right to the 38% fib. Like I said, there's a support zone down in here, so you do have some room down to 43.50 possibly. Next, chart number 12, here's that 60-minute chart I showed on Monday. This coil, again, we bounced off the coil trend line yesterday, rallied up but didn't get up very far, dumped today, and we broke this trend line of the coil. Again, a little bounce back tomorrow. Remember, broken trend line becomes resistance. So if we get a little bounce tomorrow, since we're quite oversold here, watch for that broken trend line of the coil to possibly be resistance. And that could be an area to look for a short. Next, chart number 13, here's another 60-minute chart. Steve talked about this last night, this little supply zone that we got up into, sold off. And we got up near there again today. But again, look at that. Those last 2 hour sell-offs, down extremely strong. Next, chart number 14, here's a 30-minute view. So Steve discussed this last night. Again, shows you the same wave count. We're in wave A, B, and this is some sort of C, which like I said, C could get quite deep, even into the 4200s. Or, your more bearish view would be wave 1, 2, and we're in a 3. Onus is on the bulls. And again, like I just covered above, guys, this broken trend line here is now resistance. So if we were to get a rally back to here, that's an area to watch for price potentially to have problems at 44.30. Now you do have a little downtrend channel here, which could offer a little support in the short term. Finally, Chart 15, here's a 5-minute view with the zigzag indicator. And you can see what happened today. We actually had a little bearish break in structure here where this took out the last low, and then we got a lower high. But anyway, the last 2 hours of the day, you can see that very strong sell-off. Next. Chart 16, here's the triple Qs daily. Also, price breaching this coil trend line, okay, quite strongly. And again, if this ends up being some sort of ABC zigzag, if wave C was equivalent to wave A, so this would be wave A, B, C, you could get a move down to the 345 area. Next, chart 17, here's another daily view of the triple Qs. Again, you can see this broken trend line was back tested, perfect resistance, great area to short. We got a lower high in place. This represents a potential symmetry target. So the largest pullback in the uptrend since the October low was 36.3 points. Okay, so if you take that from the highs, this is one potential target. But then you're not very far away from the 200-day moving average. One thing to note, guys, the market is more vulnerable whenever your moving averages flatten out. Back in the summer, even in late July, yes, we did get a pullback there, but your moving averages, notice this, were still pointing up, your 50-day, your 20-day. But now, with this sideways movement, down movement, little bounce, that's allowed these moving averages like the 20 and 50 to flatten out. That's where the market is more vulnerable to deeper sell-offs, okay? Next, chart 18, here's a half-day chart, shows you the same thing, little breach of the coil here. Again, we have a little demand zone right here. We'll see if that can hold or not tomorrow. Again, getting below that, though, would open up the door for a lot more sell-off. Next, chart 19, here's a 30-minute view. Again, sold off from the supply zone right into this demand zone. But boy, what an ugly couple candles there. Look at that volume. Look at that MACD. Next, chart 20, here's the KISS trend system for the triple Qs. Again, remember that took a nice trade in early March, exited in early August for a nice winning trade. It did go long before the S&P, but and it's been able to raise its stop twice. So current stop is 360.90, 361. It's getting pretty close there. Like I said, my previous comments apply. If this ends up being a deeper pullback in the markets, then this will likely stop out. Okay, they're getting close, but they haven't stopped out yet. Chart 21, here's the 4 time frames. Again, similar to the S&P. Again, nice sell-off from that resistance cycle. We're right near the ATR here. These other time frames look ugly. We've crashed through these support areas. We're below the ATR on all those time frames. Next, let's take a look at some large big cap tech stocks since we just looked at the triple Qs. Here's Apple, Crapple. And my analysis on Apple has played out perfectly. Back in August, I pointed out this bearish break in symmetry. Remember, Apple bottomed in early January. So this was the largest pullback in that uptrend. So we had a bearish break in symmetry in early August. The initial sell-off I labeled as a wave A. I said to look for a short opportunity, wave B, and you got it all the way up there. Sold off. It's been kind of hanging on to the support, but quite honestly, guys, this looks weak. I think this is at least going to test its 200-day moving average here. So one could be short here, 180, with a stop just above 180, I think. And you can at least get a move down to the 165 area. Next. Chart 23, here's the bigger picture view of Apple. This is a monthly chart, and it's a logarithmic chart so that I can draw a trend line. This, if we put in a bigger top here, Apple may eventually go to this long-term trend line. You can see that's a lot of points away. What you have here is a huge MACD divergence setting up on a monthly time frame. I mean, look at that MACD, how far away it is from that previous peak. So Apple could be setting up a larger top, that lasts maybe for a couple of years. Next, chart 24, here's Google. Nice sell-off today here. It's still uptrending, but ugly candle. Next, chart 25, here's the Google on the KISS trend system. It's still long. It's got to stop. It's kind of hard to read that. I think it's 131. But it's nice winning trade. It's traded Google very well. It went long back in March. It got out in, what is that, early July. Then it got back in later July. And that's a winning trade as well. Nice tight stop. Next, chart 26, here's Amazon, leaking oil, slight breach of this trend line, though only slight. Next, chart 27, here's the KISS trend system for Amazon. It is still long, and it's been long since, looks like early April. So it's very nice winning trade. Trailing stop is the smart trailing stop is 133.80, so getting pretty close. Next, moving on to the small caps, IWM, leaking oil here. Remember, we've been talking about this potential slanted head and shoulder look. Lost the neckline today. Price is right at the 61 fib now. Boy, does not look pretty. Not a lot. Wouldn't be surprised if it goes all the way down to the lower channel trend line now. Great short opportunity you had back in July when it had 5 ways up and tested that resistance. Just perfect. And you also had a nice sell signal on the RSI trend line break there. Just everything lined up. You had your sell off, then you had your first rally, lower high. What was your evidence to short that? Look at your moving average ribbon. It was bullishly stacked. It went bearishly stacked. And on that lower high bounce, it pinched on the underside. That was a good short opportunity. Next, chart 29, here's the other version that with the head and shoulder I've been showing. You can see it's starting to break down now. Finally, chart 30, here's TZA. That's the triple inverse ETF for IWM. You can see breaking the trend line here. Notice there's an open gap from early June. That is likely a target up there around that 32 area. So looking for more weakness in the market. All right, guys, that'll do it. Futures tonight are down a little bit, 6 points. Again, we'll see what they do tomorrow. Let's move on, look at some indicators. Chart 31, here's the VIX. Again, as you know, the VIX has been building a base here for the last 3 months or so. And nice rally off here once again. Closed below its middle Bollinger Bands today. Got quite a bit of room to even just to get to the upper Bollinger Bands. Chart 32, here's a 60-minute view of the VIX. Steve showed this last night, this trend line break. Notice price nearly retested that trend line, bounced right off of it strongly. Chart 33, here's the weekly view of the VIX. Again, as you know, this is a big long-term support area. You could see in the past, this is big levels, and it's trying to find support in this area. Next. Chart 34, here's the NYSI system, buy and sell system for the S&P with the 9 EMA. Again, overall, it's given very good buy and sell signals. Take a look at these signals. Again, they don't pick tops and bottoms, maybe 80% of the trend, but overall, they've done damn well. The last signal was a sell signal in early August. You can see here, the close below the 9 EMA. Sold off, you rallied, formed a lower high. It did not give a buy signal there. It got close, but kept you out of danger, and it's still technically on a sell. Next, chart 35, here's the other NYSI system. This is our weekly system. This also has not given a buy signal. It gave a sell signal back here in late July, as you can see, and it has not given a buy signal. It needs to take out this horizontal line here. And you can see the overall trade signals. They've been very good. Next, chart 36, here's the S&P versus the BPSPX. I've been showing this. Remember, I've been showing this kind of a negative divergence with the BPSPX lower low versus the S&P that are higher low. Well, now the S&P is getting pulled back. The BPSPX tends to lead, so wouldn't be surprised if this comes all the way down to a lower low to match this. Next, moving on to bonds, chart 37, high yield corporate. Remember, they've been holding up Pretty good. They're starting to leak a little oil here, though. Now below the 50 slightly. Next, chart 38, TLT 20-year bonds. More just chopping around here. Remember we had that little symmetry break. So we'll still see if we can get a higher low here or not. Next, chart 39, here's the 10-year treasury yield. It's been knocking on the door of this big resistance. Again, it looks like a big cup and handle, but still hasn't really broken out of here yet. But boy, we'll see what this does. If this were to strongly break out of here, that would be the catalyst, I think, for the market to sell off, going into October, for that deeper wave ABC scenario. Next. Looking at a couple sectors here, not going to look at all of them, just a few. Here's XLK Technology, contains those big cap tech stocks. Selling off here, as you can see. Next, chart 41, IYT Transports continues moving down. Remember the bear wedge we talked about? And I talked about that 200-day moving average isn't very far. Likely a magnet here in the short term. Next, chart 42, XLF Financials. Ugly candle here. It's still in this little pattern, but if it breaks this could be something like a wave B and you go down in a C. Next, chart 43, XLV Healthcare. Still hanging on to this little trend line support for now. Chart 44, XHB Home Builders. You can see home builders here leaking oil as well. By the way, some of the shorts I've issued tonight are in this space. We all know the problems in the housing market, and what's helped it is the very low supply, but eventually this area is going to give, and wouldn't be surprised to see a big move down to the 200-day moving average. Next, chart 45, XRT Retail leaking oil here. Remember shrinkage, all the theft that's been going on. Chart 46, XLE Energy, finally leaking oil. I've been stating how this was getting quite overbought. Finally losing the 90 EMA. Now the next support would be the 20-day. Next, chart 47, here's the bullish percent energy index. Again, reason why I've been looking for a pullback in the energy area is because of this sky-high BP&ER, up almost at 96%. Can only theoretically get to 100%. And so it's not a low-risk time to own energy stocks when it's up there. The low-risk time to be long energy stocks was back here in May, early June, when this indicator was oversold. Now, the official sell signal on this system will be when this closes below these moving averages. By the way, guys, that's another reason to become a subscriber to Breakpoint Trades if you're just looking at YouTube. We actually give you the live chart URLs to these custom indicators like this and those other ones I showed you, like the NYSI systems and all that. You can actually pull them up on your browser, see updated views, save them, etc. You can't do that on YouTube, but you can do that with our newsletter. Next, chart 48, here's ERY. That's the double inverse ETF for energy. Remember, I've had this on the list. Finally making a move here. You can see yesterday tagged its downtrend channel line, confirmed that is important. Today breaking it, and we're above the 9 EMA. So I've been long this, giving it some room. My stop has been that last low here. Also, your RSI trend line here, trying to break that as well for a confirmation. Chart 49, moving on to commodities. Here's DBC, starting to leak a little bit of oil. Again, it's had a nice run. Wouldn't be surprised to see this pull back a little bit. Breaking this 9, then your 20-day moving average would be next. Chart 50, here's the monthly view of DBC. Again, don't get me wrong. I think it's super bullish long term, and that's going to be a problem for the Fed guys and for your wallets with inflation. But to me, this looks like just a 3-wave ABC pullback in a long-term bull market. I think this eventually goes to new highs. Next, chart 51, crude oil, finally a little pullback, but again, it's still holding the 9 EMA. It's got to lose that. But again, you can see the very wide moving average ribbon, the little RSI divergence. So it is quite extended here. Next, chart 52, SCO, that's one of the inverse ETFs for crude oil we've been showing. You can see it's MACD's trying to curl up. Volume picked up today. This is one I'm long as well. Chart 53, here's natural gas. Was up today. The ETFs, UNG and Boyle, were actually down. The reason I think they were down is because this just shows the index and, but likely the futures contract rolled over or something, and you're not seeing that represented in here. Next, chart 54, copper. This is the weekly charts, down about 0.6%, 0.7% this week. No changes here. I'm monitoring this big coil over time. Chart 55, here's uranium, URA ETF. Again, it's had a hell of a rally from our pattern back in June and August. Again, I stated the other day that it's very extended. It looks vulnerable for a pullback. And it's been, chopping around here. To me, at least needs to test the 9 EMA, stuff like that. Again, longer term, I really like it though. Chart 56, here's the monthly chart. This is why I like it long term. Again, I've showed this chart for the last, few years. You had a break out of a multi-year base back here in 2020, late 2020. First rally up in a bull market. Big consolidation for the next 2 years and a coil pattern that allowed the moving average ribbon to pinch. The RSI was above 50% here, and each time it's held the 50% area. To me, I think this eventually takes out those upper 20s highs. Next, chart 57, here's Bitcoin, just kind of chopping around here, quite honestly. Next, chart 58, here's Riot, one of the Bitcoin type stocks. Got a big support here right around the 200-day moving average. If it loses this, though, it could let loose. So this could also be shorted below here. Next, chart 59, US dollar. Chart 59, US dollar. Again, with that FOMC, this recovered now we're in another supply zone. But again, the dollar is strong, guys. And if the dollar continues to remain strong, it's going to put pressure on the markets, and allow the rates to be higher. Next, chart 60, here's the Japanese yen. As you know, I've been monitoring this falling wedge. Has not broken out. And it's really all the way in to this apex. Usually these wedges don't go that far. So this either needs to break out now. What also could happen, this could just bust down through the bottom of this wedge. But still monitor it for now. Chart 61, here's FXY. That's an easy way to play it to the ETF. Shows you the same pattern. Again, no long triggers. It needs to break out of this to be a long trigger. Next, moving to precious metals, chart 62, gold. Gold was up today. And now testing a little downtrend line here. As you know, it held the 200-day moving average. The gold is, quite honestly, even though it's been very choppy, it's held up very well considering. I mean, it's only down, really only had about a 100-point correction from the May highs. So with that strong dollar, et cetera, and interest rates, it's held up very well. The stocks do continue to lead here, GDX, GLD, so that's your important thing. Next, chart 63, here's silver, bouncing as well. Remember, it bounced off the lower trend lines. Again, it's been best to buy the support, sell the resistance. Right now, we're right in the middle of the pattern. Chart 64, this is the weekly chart. That's quite really the best way to look at silver. It's a weekly coil setting up. Chart 65, GDX. GDX had a really good rally going today, but it lost a lot of it after the FOMC. It still closed up 1%, but you could see stalling right at the downtrend channel, still unable to close above its 50-day moving average. So the bearish view would be that this is some sort of ABC. You only have 3 waves here, 1, 2, 3. The more bullish view would be a 1, 2, and a 3, but it needs to get going for that 3. If that's what it is. Next, chart 66, another view of GDX shows you the same thing. Again, this is, it's either wave A, B, C, or 3. The only positive I'll say here is the ratio still looks okay. Stocks are leading. Next, Chart 67, here's a 60-minute view. Yesterday we had a little three-wave pullback, and that resulted in a nice move up today. But again, we gave back some the last couple hours. Next. Chart 68, BPGDM system actually went on a buy signal today. Finally closed above its 8-day moving average. You can see the last signals, the sell signal there in late April was excellent. It gave a quick buy signal there in early July, but then exited in early August. And it's now back on a buy signal. Coming from an oversold condition down here, it was below 15%. Next, looking at some individual names, chart 69, here's Newmont. Remember, Newmont is the largest component of GDX. It rallied off of its lower channel from August. It's now to the upper channel. Next, chart 70, FNV, that's another very large component of GDX. Now this is your main resistance. Next, chart 71, KGC. This one's held up very well. Ken Ross Gold, you can see this pattern. It's at the upper portion of the pattern. Holding up very well. Good relative strength. Chart 72, NG. Another one. This one had a nice pop today off the highs, but good volume coming into it. Finally, chart 73, SVM. Another one. Broke out of a wedge, pulling back. It still honestly looks okay if it can hold and stay out of this, above this broken trend line. All right, let's follow up finally with the rest of the trade ideas. Chart 74, ACHR, it's been on the list for a while as a coil. Starting to breach the coil here now. It closed right on its 50-day moving average. The bulls need to reverse it right here or it's a short. Chart 75, CRS, this was the long idea from early last week. They gave a nice trade. Hopefully you've taken some profits by now. Chart 76, SVRA, I put it on the watch list on Monday. So unfortunately it triggered today and then reversed. That happens, guys, especially when the market's down strongly. Again, if you're long, you need to stop. For me personally, I don't want to give a stop all the way below the 50-day. That's kind of wide. Probably somewhere around here, around 370. Next, chart 77, Alcoa. I gave this as a bounce play a couple weeks ago, and it gave a bounce. It's held this support. It's a short if it loses this support, but it could also be a long now if it breaks this little downtrend line there. Chart 78, XLRE. I've had it on the watch list for a few weeks now. I view this as a short if it loses this lower trend line. Chart 79, here's the weekly view. You can see that lower trend line. It actually goes all the way back to October, kind of a big coil. Again, this could be a good short if it breaks this to the downside. Chart 80, CRNX, one from Steve last night, little high and tight pattern. This could go either way. This could pop up through here. It could pop down. Quick move down to the 9 EMA. Make sure this is not for the faint of heart, guys. So make sure you're able to focus if you attempt this one. Here's some new setups. Chart 81, PHM. Looks like a short below this trend line. Chart 82, KB Homes. Another one, potential short below that trend line. Target would be the 200-day moving average. Chart 83, PLTR. Also looks vulnerable here if it loses this trend line for a short. And the final chart, chart 84, LPX, another short. It's right on the shell support. If it loses this, it could sell all the way down to here. All right, guys, that'll do it. We will see what happens tomorrow. And quick check on futures. ES futures are down only 3 points now. Like I said, coming in to the close, we're quite oversold in the short term. So I wouldn't be surprised to see a little bounce. But, pretty ugly candle today. Again, we'll see what happens tomorrow. Enjoy the rest of your evening. Take care, and thanks for the support.